You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It is February 28th, 2022, last day of the month. What a month it has been, and it just keeps getting crazier and crazier. How much crazier will it get? Well, let's talk with dailygold.com's Jordan Roy-Byrne. Jordan, welcome back. So what do you make with this? Why isn't gold up to $3,000 an ounce? We're facing the end of the world here.
Well, it isn't up to $3,000 an ounce because we have to remember there's a couple reasons. Gold had a really good run from 2018 to the summer of 2020, and gold it's in a super bullish technical pattern. I mean, the cup and handle, I'm sure many people of your audience obviously knows that. I mean, going on 11 years now. And so it had a beautiful cup when it got up to that high in August 2020. And at that point, there was going to be some kind of correction. I mean, it's taking longer than a lot of people expected, but it's within the boundaries of the pattern. I mean, it's really bullish. I mean, a 9 or 10 year cup, I mean, that could take 2 or 3 years to play out as far as the handle. And, gold, I mean, it now it looks like it's not going to go below the 38% retracement of that pattern, which is around 1690. So in the very, very big picture, gold is in a super, super bullish setup. And you know that I kind of like to be a contrarian against our industry because everybody is saying it's going to go to the moon today. It's going to go to the moon now. So I like to be a contrarian. And, that makes me a curmudgeon. But Kerry, this technical setup that we have, I mean, the measured upside target when gold breaks out, it's 3,000. And also it's the log target. If you take the percentage move of inside of the cup and then you apply it to the breakout, that gives us a target of roughly 4,000. And when I looked at historical cup and handles in major markets and the ones in gold, there's not that many, but the percent target in all these examples was achieved like roughly a year after the measured upside target. So what that means is we have this target of 3,000, and based on history, it's probably going to hit, when it hits 3,000, it's probably going to hit 4,000, roughly not much longer after that, call it a year based on this history. So that's really the big picture view is gold is setting up for one of the most historic breakouts that this market has seen. So we're setting up for the biggest move since the late 70s. But, I don't think it's going to happen this month, but I do think it's probably going to happen sometime this year. And it reminds me a little bit of 2008, when people were saying, well, all this stuff happening and why hasn't gold moved? Remember in 2008, gold corrected 30%, then it rebounded. It was consolidating in the mid 800s, around 900. And 2 years later, I mean, it was almost at 2000. So I am not concerned at all about the short term. Nobody should be dissuaded here. Gold, it looks like it's failed to break above 1900 for the time being. I mean, whoop-de-doo, no big deal, because at some point this year, it is going to break out. And I mean, over the weeks and months ahead, before we get the breakout, that's going to be the time to get your proverbial house in order. You want to get positioned. You want to be in this market because the potential upside is really huge. And I'm not, it's important for the listeners to know, as they probably do, I have not been saying that. And I don't say that often. And that's not to say that I'm always right, or I've been right to be cautious or skeptical. I'm just pointing out that I don't like to make these kind of predictions unless the evidence is really there. But technically, it really is building that, there is a high probability we're going to see a huge move over the next couple of years.
All right. And like I say, everything takes longer than you think. Once things happen, though, they happen a lot faster than you ever thought possible, right?
No, absolutely. That happens in markets quite often. I completely agree with that statement. And this pattern, I mean, I've given you, there's a 3,000 target, there's the log target at 4,000. This pattern is gold is going to go much higher than $3,000 or $4,000. I mean, eventually, I'm not saying it's going to go to 5 or 6 in the next 2 or 3 years, but I'm very, very confident in the 3,000, 4,000 targets over the next couple of years. But this pattern is going to give launch to a real significant move, not just for a couple of years, but over the next 5 or 10 years. And it's interesting. I mean, gold in the stock market, you can look at commodities in the stock market as well. If we're looking at the stock market has had 3 major breakouts, in my opinion. If you look at a historical chart. Now, you have one in the late 40s where gold, it kind of made a cup and handle there from 1937 then to 1947, 48. Breaking above that was really significant because from 1949 to 57, that was the best time to be in the stock market, in my opinion, the last 100 years. That was really the best move. 49 to 57. And then we know the next breakout was 66 to 82, the Dow, 1982. That was a 16-year breakout. The cup and handle in the stock market, by the way, in 49 and 50. By the way, that was 13 years. So that was number one. Number 2 was the breakout in 1982 that everybody knows about. Number 3 was the breakout in 2013 where the S&P broke above the 2000, 2007 highs. Then it broke above in 2013. And the interesting point is that these breakouts in the stock market, they coincided with gold or the commodities, bird's eye view, roughly speaking, we're basically at peaks. I mean, commodities peaked in 1951. That was a secular peak in commodities. This breakout in the stock market, I think, was 49 or 50. I'd have to go look at the chart. Then you look at gold and commodities, big peak in 1980, 81, possibly for the CRB. I'd have to go back and look at it. So a year later, stock market had a major breakout. 2011, major peak in commodities and gold. 2013, that was a breakout in the stock market. So these huge breakouts in the stock market coincided, roughly speaking, with major tops in commodities and gold. And it's the exact opposite because looking at gold, for example, gold's history is a little different. But if you look at the huge breakouts in gold, one could say 1971, perhaps, coming off the gold standard. So, stocks in real terms peaked in the late 60s, and then we know a couple of years later, of course, great bull market in gold. And then, more recently, we had the peak in the stock market in 2000, gold bottoms, that double bottom, 99 to 2001. And the stock market's major breakout was really in 2005 when it broke about a 20-year downtrend. So that was a few years after. But, so what's setting up? We know that the stock market is coming into some kind of secular peak. I mean, maybe it already happened. Maybe it's going to happen a year or two, but that's going to align with gold having this major breakout. So if you just study the history of these major breakouts in gold in the stock market, you can get a sense of what's coming next. And so gold is, as I said, it's a super bullish pattern. It's set up. And that breakout is not going to give rise to just a 1 or 2 or 3 year move in gold. It's going to be a 5, 7, 10-year type of move. So gold is good. I mean, eventually it's going much higher. It's going to go to 10,000, 20,000 probably in the years ahead. That doesn't mean you should buy call options right now, but that's just the longer term bird's eye view. And so the start of this, I guess what I'm trying to say is this breakout that's coming in gold, this cup and handle breakout, it is the start of a massive move higher in gold and silver as well for many years, not just 1 or 2 years.
Okay, here's the question. You're an investor, not as astute as you with timing. Aside from the thing going up $1,000 an ounce, how are you going to know when that bull is really getting ready to take off, Jordan?
So you mean when we're getting ready to take out 2,100?
Yeah.
When the pattern.
Exactly.
Well, looking at everything, it's something 1,900 on a weekly and monthly and quarterly basis is really key. So the market has been trying to break out in the last couple of days. And it looks like maybe it'll close this month above 1,900. I don't know if that's a real breakout, to be honest, because geopolitical moves, they tend to come back. I'm going to say significantly.
Yeah, the stocks aren't leading, right?
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, they tend to come back some. And with respect to the stocks, the issue with the stocks and why they underperform is since that peak 18 months ago, okay, the gold price is down, came down to 1700, 1800. Now it's at 1900. It's down below the 2070 peak. But the costs have gone up a lot. So that's why mining stocks have a history of underperforming, especially when gold is correcting. Because when gold corrects, the top line is coming down for these companies. But at the same time, they still have to deal with rising costs. And so how that's relevant and what my thinking is when we see a monthly or quarterly close in gold, weekly as well, when we see that above 1900, that I think is going to be the start of the move. And that's going to be when gold makes that breakout, that's when you're going to see the stocks and silver really start to pick up steam. So they're going to make those big moves after the breakout above 1900. So if it takes 3, 4, 5, 6 months for this real move above 1900 to start and hold, then silver and the miners, they might underperform or just kind of lay dormant until that happens. Another thing I'm watching, Kerry, is gold against foreign currencies. Another way to look at that is you could look at gold against the euro or gold against the US dollar baht. It's also gold multiplied by the US dollar. And that's important because that usually leads the gold price. Gold against foreign currencies makes new highs and new all-time highs. This is in the last 25 years. It's done so before gold and the US dollar. So that's an important leading indicator. I haven't looked at that in the last day or two, but it is getting pretty close to making a new all-time high. So that would be one signal if we see gold against the foreign currency basket make a new all-time high. Not there yet. It's really close. Another leading indicator is gold against the stock market. If we see, if the stock market really struggles for most of the year and it's in this rebound, is unable to make a new high and it makes a lower low, in fact, that could be a catalyst for gold breaking above 1900. So those are some leading indicators I'm looking at to kind of tell us, okay, gold is going to break above 1900 and hold it very soon. But the timing aspect of that is very tricky, Kerry. Even people like me will get that wrong and get too cute. So that's why, in recent weeks, in recent months, I was expecting the market to be weak. And so I've been wrong about that. But, I have been saying, okay, there's 2 things we want to see. First, let's get to 1900, because if it gets to 1900, then we know it's going to be closer to breaking above 1900. So the market got to 1900, and that tells us that this, if I'm right and we see a little pullback here, that's going to be the last pullback before it really breaks out. And so that's why I'm saying now's a good time for people to get positioned. But I still would go with the high quality stuff, whether you're following miners or, juniors, I still would go with high quality stuff. When we see gold break above 1900, as I said, you'll start to see more money flow into GDX, GDXJ, silver. Then after that, all of the smaller juniors will get money, and then they'll go crazy, when gold breaks above 2070, that old high. So I don't know if I really answered your question as far as timing, but that's how I'm looking at it. I mean, right now we're close enough to that huge move that you don't want to get too cute and try and, time yourself out of missing when the market moves above 1900, because I could be wrong. It could happen in a month. Maybe it happens in 10 months. Either way, the upside is so huge and this pattern is so bullish that, you want to get yourself positioned. You don't want to be reckless, but you just want to get yourself positioned so that you can take advantage of it. You'll benefit when it breaks out rather than, it's broken out now. What do I got to buy? I got to do this. And then you're panicked and you're going to, not make the best decision. So I would just say, you don't have to go all in today, but just, steadily put your cash to work. I've had too much cash, so I've started to put some cash to work. Just methodically, steadily put your cash to work, get yourself in position to benefit, because I do think the odds are very good that some point this year we'll see this move begin.
All right. So one interesting trend that I've seen, it isn't exactly a major upsurge in M&A activity, but what we're seeing is companies selling off projects, good projects, to other juniors selling off to juniors, taking back shares in the acquiring company. And I found that interesting because I think that could be a trend that could actually wind up giving investors huge gains.
Yeah, I mean, I think, we have to remember that the mining business is really difficult, and it's physically demanding and difficult. And so you can't, and you need a lot of people, and you need qualified, experienced people to work these projects. So you can't just collect 3 or 5 projects and assume that you have the manpower and the resources to work all these projects. So when a company, options off the project or they give it to somebody else for shares, that's a way for them to get value out of it, because they get shares in a company. And if we're in a bull market and this huge move starts, they're going to make money on the shares. And if that company that gets the project, they might be better suited to develop and advance that project towards becoming a mine. I mean, we're seeing a lot of that. I know that the majors have been doing that in recent years. They've been offloading non-core projects. And it's just, if you're a huge company, or even if you're a bigger junior, smaller projects are not going to move the needle for you. And like I said, you may not have the manpower, the resources to advance and develop those projects. Better to give it to a smaller company that's going to devote all its resources and manpower into advancing that project. So I think that's something that surely will continue, especially after we see gold make this huge breakout, because then the de facto thinking of these companies offloading these projects could be, we'll just get shares and they're going to go up anyway, which they're going to be right about that. I mean, it's still kind of dangerous to have that mindset, but for a certain period, they're going to be right about that. It reminds me a little bit of the housing bubble, how you got into trouble. So eventually at some point, they could get it, they could get in trouble if they don't monetize these shares after they go up. But I know I'm getting off course, but that's how I look at it.
I think it's really important,
Yes.
I think it's a really important trend. And so a lot of its timing is interesting, though, because these companies literally go, when they get these shares and these deals, they literally see an enterprise value that is just so attractive, Jordan, that, it's mouthwatering.
Yes. And as I said, I think we'll see more of this when gold breaks out, because all these projects are going to become more valuable. And at the same time, the shares will become more valuable, because that's just what happens in a bull market. Yeah. And there's also there's a scarcity of just projects that are out there. And I mean, greenfield exploration, it's really important. I mean, there's high quality guys that do that, but if you're in a bull market, then a lot of brownfield stuff, you can still extract some value out of that. And and so if you're a company, you don't want to just let it sit there and you're going to get nothing out of it.
Hey, there's so many dormant projects. And when, being an old lawyer and always being into like title of properties, you look at these titles, who's owned these projects, and it's as long as your arm. And it's like every major has owned a project, and then they've just, for whatever reason, they don't go ahead, and they paid big money for it. So this trend I kind of like, because it basically gives the selling company a call on the eventual success of the acquirer. And I think that's a huge trend, and it makes the balance sheet of the seller just really stand out because they actually have a tangible asset. Now, granted, it's shares in another junior, but when a junior is consolidating a project and they're exploring it to in hopes of selling off a major, the consolidation is often the missing link to making that project really viable.
And another thing I'd mention, which is really interesting, is a lot of these projects, there might be a fatal flaw. Maybe it's, the grade is too low, or there's a permitting issue, or it costs too much money, or the rock is really hard to recover. The rocks are too hard. But, you can't assume that's the truth with all these projects. Just because 2 or 3 companies owned something in the past and, it didn't work out, that doesn't mean somebody new can't come in and add a lot of value to that project and make a new discovery. I mean, I don't like to mention companies, but there's tons of examples of these, like K92 Mining. I remember when that came out of the gate, Barrick, there was an issue with the deposit, and that's why they sold it. But K92 made a fantastic discovery, and that's been one of the absolute, best stocks to own in the last, 3, 4, 5 years. So to begin with, smart people were saying, no, there's a problem with the deposit. That's why Barrick sold it. And, they made a fantastic discovery. So that's what can happen in these situations. Like I was looking at a silver company that has made like a fantastic discovery, something I bought last week. And, this is a past producing, it had a really rich history, this project. And, there were a couple companies that weren't able to move this forward or, find this high grade discovery. That doesn't mean that, a new company could come in. They have a lot, there's a lot more drill data. There's a lot more history that they have compared to somebody who owned it 20 or 30 years ago. And, there's smart people working on it who think that there's a chance there. And, this is not going to happen with every project, but it happens, more than you'd like to think. And so you have to be really skeptical about everything in this industry, but, not 100% of everything, most, but not everything.
Yeah, agreed. And we're talking about the same company. Don't want to mention it, connected with it. We're not here to push stocks at all. We're here to get a market overview and to show you how to profit from this upcoming bull market, super bull market, I might add, that is inevitable in my opinion. Jordan, the best place to find you is thedailygold.com, right?
Absolutely. And you make sure you subscribe to my email list. You can get a free report there on my front page, and also my YouTube channel. I publish all the videos and things that I do on the website, also on the YouTube channel. And I also link to interviews like this one.
And not to mention free report. Hey, really appreciate you coming on, Jordan. If you got a question for Jordan, shoot me an email to kl@kerrylutz.com. Don't forget, go over to the site, financialsurvivalnetwork.com. Get your free newsletter. We've got a lot of interesting takes on how you play the current economic situation. Inflation, believe it or not, is an investor's best friend, not a fixed income investor, but it can be your best friend if you position yourself correctly. Jordan, always a pleasure. We'll talk to you again real soon. Be well.
Thank you, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.